Well, so let us discuss electric bike insurance. You know, electric bikes are there in the market, and these are subject to insurance because they are flying on the public place, and there could be any sort of loss or damage to these bikes. Normally, you may see there are very famous electric bikes. Say, for example, Revolt RV300. This electric bike costs rupees 1.32 lakhs. Joy bike Honeybees cost 52,456. Jamope Rider 72,800 rupees. Hero Motocorp Splendor Plus rupees 73,908 to 87,699. Revolt RV 400 rupees 1.39 to 1.82 lakh. Oban Electric Roar cost rupees 1.48 lakh. Torque motorcycle Keratos cost 1.57 to 1.74 lakh. This is just an idea of the cost of these electric bikes, because these all bikes are available in the market. They are also called as e-scooters or electric bikes. You know, an electric bike means e-bike is a motorized bicycle with an integrated electric motor used to assist propulsion. E-bike is an eco-friendly electric and power-assisted bike. It is one of the fastest growing technology of the bicycle industry. Now, many kinds of e-bikes are available worldwide, but they generally fall into two broad categories: bikes that assist the rider's pedal power, that is pedal X, and bikes that add a throttle, integrating moped style functionality. Both retain the ability to be pedaled by the rider and are therefore non-electric motorcycles. These e-bikes use rechargeable batteries and typically are motor powered up to 25 to 32 km per hour, that is 16 to 20 miles per hour. High powered varieties can often travel more than 45 km per hour, that is 28 miles per hour. Now, vehicle types, if you want to see, you will find two-wheelers, non-registered electric vehicles are there. Their battery capacity is up to 0.25 kilowatt. Maximum speed is up to 25 km per hour. And the vehicle weight, excluding battery weight, is up to 60 kg. So this vehicle type is insurable. I repeat, two-wheeler non-registered electric bike, battery capacity up to 0.25 kilowatt, maximum speed up to 25 km per hour, and the vehicle weight excluding battery weight is up to 60 kilograms. Now, sections covered under this policy is to be understood, because this policy provides minimum 2 sections, whereas section 1 is mandatory, and in all 9 sections are there. Means minimum 2 sections, and out of those 2, section 1 is mandatory, but 9 sections are available. The customer has the choice, feasibility to select the sections. And these sections are: loss of or damage to the vehicle insured, 1; 2, liability to third parties, 3, personal accident cover for owner driver. 4. Nil depreciation. 5th. Consumable. 6th. Return to invoice. 7th. Hospital daily cash allowance. 8th. Daily expenses reimbursement. And 9th. Personal belongings. These 9 sections are available. Out of these, minimum 2 sections are required, and section 1, that is loss or damage to the vehicle insured, is mandatory. This is the coverage available under the policy. Now, the section 1, loss of or damage to the vehicle insured, is a mandatory cover. It covers only own damage part of the vehicle. Sum insured would be insured declared value as per the vehicle age, and the deductible would be, in case of partial loss, 5% of the claim amount, subject to a minimum of rupees 500 only. But in total loss, 5% of the claim amount, subject to minimum rupees 1000 only. Main exclusion to this section is no theft cover of standalone battery is covered. Means theft cover of standalone battery is excluded, and no NCB slabs are there. So this is the mandatory section of loss or damage to the vehicle insured. Second section stands to liability to third parties. This is an optional cover, because third party cover means legal liability to third party for bodily injury and property damage. If it is selected, then the liability, third party liability would be paid, but the deductible will also apply. In case of partial loss, 5% of the claim amount, subject to a minimum of rupees 500 only. And in case of total loss, 5% of the claim amount, subject to minimum of rupees 1000 only. I repeat, liability to third party section is optional. If it is selected, the legal liability to third party for bodily injury or property damage are payable. But this is again subject to deductibles. In case of partial loss, 5% or minimum 500, and in case of total loss, 5% or minimum 1000 rupees. Section 3 stands for personal accident cover for owner driver. This is again an optional cover. So this is as per the choice of the customer. If you want, you can select. Now, who will be covered under this section? Owner of the vehicle only. Sum insured available is 1 lakh to 15 lakh in multiples of 1 lakh. 1 lakh to 15 lakh in multiples of 1 lakh. Sum insured is payable at the time of loss is in case of death 100%, loss of 2 limbs 100%, loss of 1 limb 50%, and permanent total disablement from injuries other than the named above 100%. But main exclusions are intentional self-injury, suicide or attempted suicide, physical defect or infirmity. An accident happening while a such person is under the influence of intoxicating liquor or drugs. So these are 2 exclusions. Otherwise, the section will provide the coverage from 1 lakh to 15 lakh as per the choice of the insured, who can select the sum insured in multiples of 1 lakh rupees. So this is section 3, that is personal accident. Section 4 is nil depreciation. In e-bike also, this nil depreciation cover is available. This is again optional cover. And if it is selected by the insured, the maximum 2 claims are payable during the policy period. If there is a claim. If no claim is there, there is no question of payment. So on transfer of vehicle, cover will cease. And there will be no refund of premium. This cover is available up to the vehicle age of 5 years. And main exclusion is only loss or damage to tires or battery of the insured vehicle. So this nil depreciation is available as an optional cover. Customer can select. Two claims are maximum payable under the policy period. If the vehicle is transferred, cover will cease. No refund of premium will be made. Cover is available up to the 5 years of the age of the vehicle, and loss or damage to the tire or battery are excluded from the section. So this is about the nil depreciation. Section 5th refers to consumables. Now this is again an optional cover. Maximum 2 claims are payable again. On transfer vehicle, this cover will cease. No refund of premium will be made. And this cover is available up to the vehicle age of 5 years. This section excludes any claim where an opportunity not given to the insurer to inspect the damage or loss before commitment or commencement of repair. Means any claim where an opportunity is not given to the insurance company to inspect the damages or loss before commencement of repair. So that loss will be excluded from the policy, otherwise 2 claims are covered. And up to the vehicle age of 5 years, this section can be provided to the e-bike insurance. This is optional section. Customer has to select himself if he wants this consumable section. This is his choice. He has to select if his vehicle is not older than 5 years. So section 6 is return to invoice. This is again an optional cover, but only first owner of the vehicle can take it. For new vehicle up to 1 year it is available. On transfer of vehicle, this will cease. No refund of premium will be made. And return to invoice section does not cover if the vehicle is recovered within 90 days of the theft, unless final investigation report or non-traceable report is submitted. This cover is not available for imported vehicles, that is fully built up units imported from overseas. So return to invoice cover is one cover which is optional and granted to first owner of the vehicle only, for new vehicle up to 1 year only. If the vehicle is transferred, return to invoice cover will cease. All this section will exclude if the vehicle is recovered within 90 days of the first theft, unless final investigation or report or non-traceable report is submitted. If these reports are submitted, then the loss can be considered. But this cover is not available for imported vehicles, that is fully built up units imported from overseas. Section 7 is hospital daily case. Hospital daily case means a benefit payable is 1500 rupees per day of hospitalization for maximum up to 30 days. This section is again optional cover. In the event of insured or any covered occupant suffering from an accidental injury involving the insured vehicle leading to a hospitalization as an inpatient for minimum 24 hours, in that case, this section will pay 1500 rupees per day for the period of hospitalization, but not more than for 30 days. One claim can be taken during this policy, but claim payable is maximum for 30 days. After the discharge of hospital and on submission of bills, the claim will be settled. If hospitalization is less than for 24 hours, in that case, claim is not entertainable, because the hospital daily case is payable for per day basis. So that 1500 rupees per day will be paid only after when the hospitalization is for more than 24 hours. Next section is daily expenses reimbursement. This is again an optional cover. But this section covers the expenses to meet the cost of hire transport to reduce inconvenience if insured vehicle is damaged by a peril covered. Some insured has three options: 300 rupees, 400 rupees and 500 rupees. This benefit is payable for maximum 5 days in excess of 3 days. Means if the vehicle is laid up at workshop for 8 days, then 5 days benefit is payable. In case of theft, total loss claim of vehicle, the allowance is payable up to 10 days in excess of 1 day. Day count from loss assessment date to vehicle delivery date from workshop. Main exclusion of the section is claim where the vehicle is not repaired at SCI authorized workshop. So this expenses reimbursement section is an optional cover. This will enable the insured to meet the cost of hire transport to reduce inconvenience if insured vehicle is damaged by a peril covered. Some insured has got three options: 300, 400 and 500 rupees. Anyone can be selected by the customer. Benefits are payable maximum for 5 days in excess of 3 days. Means if the vehicle is laid up at workshop for 8 days, then 5 days benefit is payable. And in case of theft or total loss of claim of the vehicle, the allowance is available up to 10 days in excess of 1 day. But the day count will be from last assessment date to vehicle delivery date from workshop. The last one is personal belonging. This is again an optional cover. Personal belongings for the purpose of this section means items such as clothes and other articles of the personal nature. Sum insured means rupees 500 to 10,000 in multiple of 500. On transfer of vehicle, the cover will cease and there will be no refund of premium. The insured will be at 10% of the limit of indemnity selected, subject to minimum of rupees 100 in each and every claim. This is the compulsory access of this section. And the main exclusions to this section are: loss excludes money, security, checks, bank drafts, credit or debit cards, jewelry, lens, glasses, travel tickets, watches, valuables, manuscripts, paintings, electronic equipment such as cellular phones, data and photographic, audio, video and telecommunication equipments, and item of similar nature. So this is section 9, personal belongings. This is covering the risk of personal belongings for the purpose of this section means clothes and other articles of personal nature. The sum insured may be 500 to 10,000 in multiple of 500. On transfer of the vehicle, the cover will cease, and the compulsory access would be, and each claim the insured will be at 10% of the limit of indemnity, subject to minimum rupees 100 in each and every claim. So these are the 9 sections you have seen. Now premium rate depends upon the sections. Say for example, loss of or damage to the vehicle insured, the premium rate is 0.78% of the IDV. Third party liability premium is fixed as 178. PA cover for owner driver is 0.0175% of the sum insured selected, because sum insured available is 1 to 15 lakh in multiples of 1 lakh. Nil depreciation rate is 1.18% of IDV. Premium rate of consumables depends upon the age of the vehicle. That is for 1 year 0.15, 1 to 2 years 0.18%, 2 to 3 years 0.20%, 3 to 4 years 0.24%, and 4 to 5 0.28%. This section is available for 5 years only. Return to invoice premium rates again are depending upon the age of the vehicle. For up to 1 year, it is 0.16%, 1 to 2 years 0.045%, 2 to 3 years 0.71%, 3 to 4 years 0.105%, and 4 to 5 years 0.155%. Then for hospital daily cash allowance, the premium is 130 rupees because the sum insured covers the 1500 rupees per day for maximum 30 days. And for daily expenses reimbursement, premium rate is 88% of the sum insured selected. And the sum insured options are 300 rupees, 400 rupees or 500 rupees per day. For personal belongings, 8% of the sum insured selected. And sum insured is rupees 500 to 10,000 in multiples of 500 rupees. Discount and loading provisions are also there. Loyalty discount is there. 2 or more vehicles are insured, in that case 5%. Claim free discount, no claim in the preceding year, 20% discount is available. A special discount, that is discount for a specially designed modified vehicle for the blind, handicapped and mentally challenged person, 30% discount is available. If the age is not more than 5 years, in that case, again there is a discount. But if it is more than 5 years, then the loading is also there. Direct discount can also be given up to 20%. Policy cancellation is possible on request of the insured, but premium will be refunded on insured request on the short period basis. If the SGI is cancelling the policy, then the premium will be refunded on the basis of pro rata. And this refund of premium is possible if there is no claim on it. Because the short period scale is always from 1 to 8 months, because for 9 months and more than 9 months the premium is full. And the refund of premium in by short period scale is always lesser than the pro rata premium. But this short period scale is applicable only when the insured wanted to cancel the policy. If the insurance company is cancelling the policy, then in that case the refund would be on the pro rata basis. So that means any kind of e-vehicle is insurable, because these are motorized bicycles with an integrated electric motor used to assist propulsion. Actually, e-bike is an eco-friendly electric and power-assisted bike. It is one of the fastest growing technology of the bicycle industry. Many kinds of e-bikes are available worldwide, but they generally fall into two broad categories: bikes that assist the rider's pedal power, that is pedelecs, and bikes that add a throttle, integrating moped style functionality. So both retain the ability to be pedaled by the rider and are therefore not electric motorcycles. So e-bikes use rechargeable batteries and typically are motor powered up to 25 to 32 kilometers per hour. That means 16 to 20 miles per hour. And high powered varieties can often travel more than 45 kilometers per hour. That means up to 28 miles per hour. And these two-wheelers are non-registered electric vehicles. Non-registered means not registered with the RTO authorities. In that case, these vehicles are as good as properties. So normally you'll find the battery capacity up to 0.25 kilowatt only. Maximum speed is up to 25 kilometer per hour, and vehicle weight is normally, excluding battery, is up to 60 kilograms. So this policy is good because this is providing 9 sections. Out of that, only 2 sections are minimum 2 sections are required, and section 1, that is loss of or damage to the vehicle, is that section is mandatory only. But in 9 sections, you will find every kind of facility there, because not only the loss or damage to the vehicle is covered, but liability to third parties is also available as an option. Personal accident is available as an option. Nil depreciation, consumables, return to invoice, hospital daily cash, daily expenses reimbursement, and personal belonging. These are all add-on covers to the motor insurance policy, but here in this policy, because this is not a registered vehicle, these sections are provided as an option to the insured. So the insured has got the choice to select any of them except the section 1, because in addition to section 1, one more section is required minimum. But if the insured is interested, can select all the 9 sections. All 9 sections are available. Because section 1, that is mandatory section, will cover only the risk of vehicle or e-bike, that is the OD part, and that will also not cover the theft cover of standalone battery. In this e-bike insurance, NCB slabs are not applicable, because this is of course not a motor insurance policy. This is a special policy designed to cover the unregistered e-vehicles. So there has to be some difference. But because this is also applying on the public place, the liabilities are almost similar. The thing is, this is operated with a battery. So this is pollution free. And this is not registered with the RTO authorities, so they are not treating it as a motor vehicle. Again, because the vehicle has to ply on the public place, this can cause third party loss, this can cause property damage, this can get damaged itself. So all the similarities related to motor vehicles are there, but the policy is different. So to make the policy different, premium rates are different, coverages are different, choices are different. This all makes this policy different to the other motor vehicles, because many kind of e-bikes are there, and out of them 2 are very famous nowadays. Bikes that assist the rider's pedal power, and bikes that add a throttle, integrating moped style functionality. Both retain the ability to be pedaled by the rider and are therefore not electric motor vehicles. And their speed is also depends upon the battery power, because they use rechargeable batteries and typically are motor powered. So these e-bike, despite being motorized bicycles with an integrated electric motor used to assist propulsions, they are eco-friendly and power assisted bike. And this segment is the fastest growing technology of the bicycle industry, because you will see in the market plenty of designs are there, plenty of models are there, and their cost differs according to the models and capacity. So right from 50,000 to 2 lakh, number of designs, number of models, number of makes of the vehicles are available in the market. Most common may be costing to 52,000, and most famous one that is torque motorcycle Keratos, may cost up to 1.75 lakh. So that much variety is available in the market. Product is very popular because this segment is growing. It is a eco-friendly segment. Demand is there, and the whatever options are available of both the varieties, they all can be insured. Customer is getting feasibility to select the number of sections available to them. 9 options are good options, providing the 8 sections optional. So section 1 is only mandatory. It's all about depends upon the buyers, how beautifully they are, how carefully they are maintaining their vehicles, and what sections they are selecting for the insurance. So this is all about this insurance of e-bikes, because the policy is known as the electric bike or e-bike insurance. If you have any questions, any doubts, you can ask me now.